Hello everyone and welcome to the Ninjatrader Ecosystem Webinar Room. My name is Juanita Archuleta and I work for the Ninjatrader Business Development Team in our Denver office. We have a very special event for you today with Adam Fiske of Boss Trading. I would like to mention that while you fill that out, it is important to understand that there are substantial risks in trading commodity futures contracts and Forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker and could even incur losses beyond these amounts. Please inquire at the following link for a full copy of the CFTC risk disclosure, or if you have any other questions regarding that. This presentation is presented by Ninjatrader LLC, which is the technology company responsible for developing and supporting the Ninjatrader trading software. Brokerage-related questions should be sent directly to the Ninjatrader brokerage. With new tools added nearly every day, Ninjatrader ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools and services you are looking for with a simple keyword search. You'll also find information about upcoming webinars and an on-demand video archive to view previous event recordings. Also, if you are active on social media and you'd like to find out all updates on things NinjaTrader ecosystem, please feel free to follow us on Twitter and Facebook, as we are very active on both of those social media sites. Just going to put our handles in the room for you, those of you who would like to follow us. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure you are on the latest version of NinjaTrader and to pick up a free live data trial, please visit the following link. You're also welcome to lease or purchase NinjaTrader using the following link, and if you are just getting started with NinjaTrader, we do offer free live training on a daily basis. You can view a schedule of our weekly webinars using the following link. We have we are very excited for this unique event in which Adam will explain how to incorporate order flow, multiples, and evidence-based tactics to achieve trades which are truly unique and therefore uncrowded. Thank you again for everyone's attendance, and without further ado, it's my pleasure to welcome to the NinjaTrader Ecosystem Webinar Room, Adam. Please go ahead and take it away, Adam.
Good morning, good afternoon, good evening, depending on whereabouts you are located in the world. Thank you for attending. Look, I really appreciate everyone making time in their schedule to attend. So my focus will be to make sure that you get some value and have gained some awareness and insight into trading tactics that you previously haven't been exposed to. Now, while this webinar will isolate a number of the order flow multiples I use, how would you like to see how all of these different approaches complement each other in a real life trading environment? So at the end of this webinar, I'll be opening up the live trading room for a full day of trading, and I'm offering everyone at the webinar a free admission ticket to come view in real time how I put all of these pieces together. So you can grab your free admission pass by going to bosstrading.com.au. And look, you can do this on a mobile phone, desktop, whatever. You'll find joining the room a brief, simple process. Just sign up for the free trial. Now, while you're doing that, a quick overview of who I am. There is more detail on the slide, however, most relevant to what I'm going to share with you, which will add value to your trading, is whilst trading at a proprietary trading firm, it gave me experience in and exposure to how many institutional traders use combinations of products within a specific trade to strip out directional risk. In my own case, I traded 90-day bank bills as a proxy for 10 years, and I used to use spreads to manage the risk. So during my time, I learned structure trades, and I'll show you a couple of examples. Now, I'm sure most of you are aware of what a spread is, but just to provide an example, let's say you went, so it's currently September, long September ES futures, short December ES futures, that would be a spread trade. That's a calendar spread. Otherwise, you could go long 10-year bonds, short the Australian 10-year bonds. That's a couple of examples. Now, spreads are also known as relative value trades, and I want to highlight some more complex spread trades to illustrate how common relative value trading is. So common, in fact, what you're seeing on the slide here is my notes from when I was at a prop firm of how to actually enter the spreads and chart them in CQG. So we start up the top there with bring up the little marker here to help highlight it. So we've got some calendar spreads, and then we go through to flies or butterflies, double flies, and double doubles. Now they're all quite fancy names. Just quickly, this HBS, that's the code of the instrument, which in this case is a 90-day bank bill. Z, of course, that's the month, so that's December, and 5 actually refers to the year. So this is back in 2015 when I was prop trading. So I just want to go through and give you an example of a typical trade that strips out the risk. So here we've got a double-double. Now, for every long, which is the first one here, September bank bill, we'd need to be short 2 December bank bills, long to March the following year bank bills, and then short 1 September, June the following year. Now it's not important you know how to chart double flies, etc. I just wanted to illustrate how trading can revolve around value models based on multiple inputs. So let's extrapolate. Do you think, for example, that if I'm a trader in Germany, my complex structure trades, like what I showed you, which include the Aussie dollar futures, for example, will be different to, say, a complex structure trade including the Aussie dollar futures by a trader based in Australia? And to help answer that, aren't we dealing with traders with different base currencies, interest rates, stock markets, etc.? So let's keep that notion of value in the back of our minds as we work at putting order flow multiples together and see how we can end up with uncrowded trades. So on the screen here, this is how I started a trade sequence as I broadcasted in the live trading room. Now just remember, you can get your free trial access by going to bosstrading.com.au. As I mentioned before, you can do this from a mobile or a desktop. You'll find joining the room a brief, simple process. What we can see on the chart is what I call transition areas. Okay, so here's a composite profile, but I refer to a lot of these areas as where we transition from areas of acceptance to lower acceptance, mainly focusing on where the noticeable changes are. So most relevant on the day of when I was trading, working into the day from the chart on the screen, are the areas that I've marked in. So you notice here we've got, so here's where we've closed. That's the current price there. And then directly below us, I've got a significant drop away in acceptance. And also obviously up at this area, we transition down as well into a real drop away. Now, I made a note of including the date just to mention that I put actually quite a bit of work into just how much history is relevant to my composite profiles. So in this case, all of my composite profiles that you'll see moving forward, or my historical profiles, will be based on history from the same date. What you're looking at is a chart showing daily profiles. However, the stock market in Australia has a staggered open. All right, now this is the futures, Aussie dollar futures, but just remember we're talking about value and relative value trades and other markets. So the Australian stock market, as I mentioned, has a staggered open. So I start value calculations in the Australian dollar at 10:30 a.m., which is roughly when all stocks are finally trading on the ASX. Notice the lower level from the previous chart, that transition area that I've marked in, the area where we suddenly drop away to a lot less acceptance. And you'll notice two previous sessions for the ASX on the daily profile, so current 1, 2. You can see here there was no interest in trading below what that lower level of acceptance was. Or below this level over here, you've got very little acceptance. So I'm going to keep bringing in additional order flow tools into the trade. I also want to let you know that at this point it's just prior to the release of some major economic data relevant to the local Australian dollar valuations. So let's have a look. Just have please take notice of this is the current daily profile, and this is high acceptance pre-data. All right, so this is where most of the business has been traded through the course of the day so far. I've also got VWAP here that commenced at the start of this session, right? Just standard VWAP. Let's keep adding information. So what happened was the news came out and it was actually really a non-event, and price just remained in a really tight range. But what can we tell from this? Well, what you can see on the screen here is it's referred to Ninjatrader's volumetric bar. So this is in their order flow plus tools, suite of tools. Now, while you might not be able to see the numbers, the quantity of orders either hitting the bid or lifting the offer are distinguished by the shading intensity of the bars. All right, so the higher the quantity of contracts going through hitting the bid, for example, is going to be these darker red areas, the reverse for lifting the offer. Now, what I can see by looking at this is there's obviously plenty of hitting the bid, right? Aggressive selling at the lows, but price isn't moving. So what does this tell you if we've got aggressive selling that can't push prices lower? We were looking at this chart before. The only difference is I've added the cumulative delta, another tool from the Order Flow Plus suite of tools. Since we've hit that transition area, all right, which is just here, so this is from the very first chart I brought up, you notice that we've got a real slope overall in the cumulative delta, but again, price isn't moving lower. Something else to note, I talked about value between time zones, but value also changes depending on who is in the market. Now let's think about if I'm a large trader waiting to place structural trades that include ASX stocks, then and I need to wait until the ASX open, but then just an hour later there's some potential market influencing data, I'm going to sit that first hour of trading out and wait for that to pass before I start putting my trades in. So I've added another VWAP to this chart as well. All right, so here's the initial VWAP that starts from the commencement of the trading day or of the entire session, and also this is VWAP just in here, and that VWAP there commences at the time those larger structural traders will be commencing entering. So now I have two VWAP plots. You'll see why shortly, and similarly I'll also explain why I've added two standard deviations Right, it's a couple of standard deviations around this VWAP. And you'll see why I've done that in a moment. Right, here is a tool I use extensively. And again, it's part of the order flow suite of tools. Now we are looking at a chart of the depth map, which shows the size and duration of historic orders. There's an order here that you can probably see that stands out in terms of its size relative to all of the others. Now, interestingly, that order there has been in the market for a lengthy period of time. So the point of that is it's there to gain, obviously, queue position. So you can consider that someone's genuinely intending to want to get filled up there. So why am I looking at that? Well, I might be an intraday trader, but these orders are a great source of information to larger traders who are taking bigger time frame views than, say, myself as an intraday trader. So if price moves up to that area, what does it say about the appetite for the long side if this order is literally eaten up? Or by contrast, what if there is a lack of long interest if we reach that order, even fill it, but then can't sustain a move to higher levels? And I should mention this is only one of many ways in which the depth map can be used to build robust trades around order flow. So look, come and check out how I use the depth map in different ways and in conjunction with other order flow tools by checking out the live trading room. I run the room every day, including later after this webinar. I'm sure you can sign up while listening to the webinar. We did get on this long in the live trading room. Now I didn't hit it just here perfectly, it was back in this region. And in real time, I was also watching the DOM, and we were able to get on side and then lean on a large bid to manage the trade. I mention this because the DOM is something I thought I'd never get my head around, but prop trading is where I developed my chops on it, and it is now part of the multiple order flow tools that I refer to constantly and that I'm using in the live room, so that attendees can gain insight into it also. So back to the chart, just grab a quick drink of water. We've got that transition area that came from that longer term profile that went back to early May. We've got VWAP from the start of the session. I've got my VWAP in here that came in once the bigger traders who can place those structural type trades are present. And I've got my two standard deviations around that VWAP. So can you notice, and I'll point some of these areas out, that we've got multiple areas of shorting right at the regular session VWAP. All right, so here's shortings come in here as well, and obviously it comes into this area also. And remember that high acceptance area that I pointed out as well, which is up here. So what we've been able to do is combine some ideas about where traders are likely to act in the market. So a lot of traders reacting to that initial VWAP, but of course bigger participants aren't going to pay much attention to that because for them it's not relevant. And we also are aware that sellers came in and through the constantly hitting the bid but not being able to move the price down. And I said, well, what does that tell you? So we've got a build up of sellers, not only at a transition area where below no one actually wanted to do any business. If we look at value just for the ASX period, And you can see how then we've eventually moved through, and this has been fueled by sellers from trying to get below this area, which is clearly an area where there's no acceptance. You're also seeing us move through an area of VWAP that bigger players are not assigning any relevance to. And also we're moving through this acceptance that was established by, again, traders who were in the market pre that the bigger players coming in, and so that those who've worked off those areas have obviously got caught offside. You'll also notice, and this is where I get back to the 2 standard deviations around VWAP, that price does actually remain within this. This is a characteristic of the Australian dollar futures. It's not unique to just the Australian session. If you look at it through when the DAX commences and then when the FTSE comes online and later when the US market opens up, you'll see exactly the same behaviour. Right, now the day progresses, and if you recall, we talked about the many inputs that go into complex structural trades and how they'll vary as we move into different time zones and the markets that trade during those times. So notice VWAP, I just alluded to this before, resets when the DAX opens. So this is the DAX here, and resets again when the FTSE when it opens. And as I mentioned, how price stays within 2 standard deviations. And that's simply because there's a lot of obviously programmed reversion trading that's being executed. There's actually a bit to cover in this single slide, including an uncrowded trade. So I have a question here for everyone. Is it ridiculous to suggest that with so many points of evidence being drawn upon, that you are going to need guidance simulating everything in order to execute effective trades? So my suggestion is just go and grab your free admission to the live trading room, where there was so much covered in real time. I share trades in real time, so you can put me to the test. Yeah, just go to bosstrading.com.au. You can follow along there. It's quite straightforward how to sign up. Right, okay, and that uncrowded trade we all took in the room I want to cover is as follows. I've separated value for, or the profile if you like, for the European session from the earlier Asian session. So here's the profile for the entire session that commenced on this particular day. The profile here commenced when the DAX started. So on this slide we've got order flow multiples. Again, I should have mentioned here the VWAP and the ability to set VWAP from different periods of time or different when other markets start, and obviously the deviations. That's a tool I use extensively. Again, that's part of the order flow plus suite of tools from Ninjatrader. Now, so as this day starts trading through, notice the high area of acceptance in the Asian session profile. Right, so that's a lot of acceptance and trading in this region. So you've got shorts, obviously, as we start to move into this, thinking about working off this area. You've also got traders who are short, because this is an area where plenty of buyers and sellers agreed on doing business, so you've got plenty of sellers in the market as well. So you've got shorts hitting the this area as I mentioned, and you'll also notice on this chart is that initial lower transition area. So what we're able to do is recognizing how the market tends to reset itself around these standard deviations at each session change. Can you see how the market's sold off here? Traders have come into the market expecting a short to continue, right? So sellers have got on board here. You can see how price pulls up exactly around a couple of standard deviations. This sell-off is actually more to do with the fact that you've got traders covering into the next session, right? It's not really to do with the auction, regular auction, if you like. The next session opens. You can see that we blast straight through this high acceptance where there's plenty of shorts, and I want to show in particular, see how there's very, very little acceptance in the European trading area. So you've got a lot of traders focused on this. And remember, they're not many traders won't have a view of these two value profiles displayed. They'll be focused on the composite or the complete day. So we've got lots of short traders in, but just for this period here, that's an hour of trading, right? And you can see how very little business is being done, right? So there's no acceptance doing business down at this area. So it should be no sort of surprise to you that we're on a long, and the acceleration here is due to short traders being on the wrong side. Now notice how we hug this second deviation, but the other thing that I want to point out is, where does the market come to a pause? So remember the chart from the very first chart at the start of the session I showed you, that higher transition area? Well, that's it up here. And there is the market pausing at that area and finding agreement and acceptance, as you can see filling out here, because it's a significant, relevant area of acceptance in the auction from previous history. So for me, how cool is all of that? And I mean that. I'm constantly trying to identify what many other traders are doing and avoid doing the same thing. Right? So some of the real enjoyment in trading comes from when you spot what's known in chess as the deflective sacrifice. So opponents are lured into taking a chess piece that has been sacrificed to deflect what the underlying strategy is. The opponent falls for the trap, taking the piece and then falsely believing they've actually made the right move. And I'm sure you know what the next outcome is. Well, when this happens, I have to say, I should say it absolutely happens in markets, right? It happens all the time. And it's a real buzz when you're able to recognize it and, importantly, then participate it in real time. And I can say with all honesty, it's quite exhilarating. So that's actually brought me to the end of showing you a whole lot of order flow multiples. So there were actually plenty of things there that we combined. So what I suggest is come and check out this all integrated in real time. You just by signing up for the trial, and you can see me go through this, work through prep, and then start to implement these trades and see them play out. Now, and of course, you've all come and attended on your time, so I'm hoping that you've gained some real benefit from seeing some insight into some of the techniques that are working right now in markets and on a very regular daily basis. And with that, I'd like to say thank you very much. And back to you, Juanita.
Thank you, Adam. I definitely want to give Adam a big thank you for joining us today and for giving a great presentation. Everyone in attendance here today will receive an on-demand recording of today's event. Please keep an eye out for that email. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you do find value in these events, we hope that you will attend them on a regular basis. On a regular basis. We would like to remind you that all the information provided in this was that of Boss Tradings and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we do appreciate the time that you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from everyone here at the NinjaTrader ecosystem.